Hi learners, in this video we are discussing about mock test of NISM Series 8 equity derivatives. First of all, let's see the actual exam pattern. The test duration is 2 hours, exam fee is 1500, total number of questions are 100, maximum marks 100, pass marks is 60, negative marks is 25%, certificate validity is 3 years. And this is the link to register the exam. First question. An investor with a bearish market outlook should buy option A, underlying stocks, option B, put options, option C, call options, and option D, all of the above. Take your time to answer the question. The correct answer is option B, put options. Next question. STT is applicable on purchase transactions of equity futures. State whether it is true or false. The correct answer is option B, false. Which strategy is used to generate extra income from existing holdings in the cash market? Option A, strangle, option B, straddle, option C, share strategy, option D, covered call. The correct answer is option D, covered call. Next question. A good market index should have which of the following attribute? Option A, it should reflect the market behavior. Option B, it should be computed by independent third party and be free from influence of any market participant. Option C, it should be professionally maintained. And option D, all of the above. The correct answer is option D, all of the above. Next question. Which of the following person can access only his orders and trades but not access to others' orders? Option A, branch manager. Option B, corporate manager. Option C, dealer. And option D, none of the above. Option C, dealer. If you sell a put option with a strike of 480 rupees at a premium of 60, what is the maximum gain that you may have on expiry of this position? Option A, 540. Option B, 60. Option C, 0. And option D, 420. The correct answer is option B, 60. Delta for put option buyer is positive or negative? The correct answer is option B, negative. Next question. An investor buys an index in cash market at 5,000. Cost of financing is 8% and the return on index is 3% per annum. Then what is the fair price of index 3 months futures contract? Option A, 5,060.52. Option B, 5,010.52. Option C, 10,050.52. And option D, 10,060.26. Option A, 5,060.52. Next question. What is the operational mechanism of futures contract? Option A, it is not traded on the exchanges. And option B, it is traded on the exchanges. The correct answer is option B, it is traded on the exchanges. Next question. Combination of options having same underlying but different expiries as well as different strikes is known as option A, calendar spread, option B, time spread, option C, horizontal spread, and option D, diagonal spread. The correct answer is option D, diagonal spread. Next question. Clearing members perform the which of the following important functions are? Option A, risk management, option B, clearing, option C, both A and B. The correct answer is option C, both A and B. Next question. Dow Jones Industrial Average and Nikkei are popular for option A, market capitalization weighted method, option B, price weighted indices, option C, equal weighted index, and option D, none of the above. The correct answer is option B, price weighted indices. Next question. Which document inform to clients about the kind of risk that derivatives can involve for the client? Option A, risk disclosure document. Option B, client application form. Option C, both A and B. And option D, none of the above. The correct answer is option A, risk disclosure document. Next question. A high-risk averse investor would prefer investments in option A, equities, option B, fixed income instruments, option C, debt instruments, and option D, both B and C. The correct answer is option D, both B and C. Which of the following index indicates mid-cap index? Option A, S&P BSE Sensex, option B, S&P BSE Mid-Cap, option C, S&P BSE 200, and option D, Nifty 50. The correct answer is option B, S&P BSE Mid-Cap. The total money value of the business which took place on the contract during the day is called option A, total traded value, option B, total traded quantity, option C, number of dates, and option D, none of the above. The correct answer is option A, total traded value. SEBI has set up a committee to develop the appropriate regulatory framework for derivatives trading in India. Option A, Mr. B.N. Sahu, option B, Mr. Praveen Kumar, option C, Mr. L.C. Gupta, and option D, none of the above. The correct answer is option C, Mr. L.C. Gupta. Next question. Higher the price volatility of the underlying stock of the put option, higher or lower would be the premium. The correct answer is option A, higher. Next question. American option means option A, option can exercise investor right at any time or before the expiry date or day of the contract. Option B, option can exercise investor right only on the expiry date or day of the contract. The correct answer is option can exercise investor right at any time on or before the expiry date or day of the contract. Next question. In the money option means ITM option is an option with a positive or negative intrinsic value. The correct answer is option A, positive intrinsic value. In case of declaration of extraordinary dividend by any company, the total dividend amount would be reduced or increased from all the strike prices of the option contracts on the stock. The correct answer is option A, reduced. The entity is required to redress the grievance within how many days, failing which the complaint will be routed to SEBI directly and a news course registration number for the complaint will be generated. Option A, 15 days, option B, 30 days, option C, 45 days, and option D, 60 days. The correct answer is option B, 30 days. Next question. A stock or portfolio having beta more than 1, then which type of stock or portfolio it is? Option A, conservative stock or portfolio, option B, aggressive stock or portfolio. The correct answer is option B, aggressive stock or portfolio. An option buyer pays a relatively small premium for market exposure in relation to the contract value is called option A, average, option B, leverage, option C, delta, option D, none of the above. The correct answer is option B, leverage. Next question. An investor taken a short position of one contract in April ABC futures at a price of 4,800 rupees. Lot size is 50. When an investor closed this position after some days, investor realized that made a profit of 5,000. Which of the following closing actions taken to generate this profit? Ignore brokerage cost, transaction cost, etc. Option A, selling one June ABC futures contract at 4,900. Option B, buying one June ABC futures contract at 4,900. Option C, buying one June ABC futures contract at 4,700. And option D, selling one June ABC futures contract at 4,700. The correct answer is option C, buying one June ABC futures contract at 4,700. What are the stock benefits and cash benefits given by the corporates? Option A, amalgamation, option B, bonus, option C, splits, and option D, all of the above. The correct answer is option D, all of the above. Next question. SEBI Act 1992 provides for establishment of Securities and Exchange Board of India SEBI with statutory powers for option A. Regulating the securities market, option B. Promoting the development of the securities market, option C. Protecting the interest of investors in securities market, and option D. All of the above. The correct answer is option D. All of the above. Next question. Trading cum clearing member clears and settles whose trades? Option A. Own trades. Option B. Client trades. Option C. Trades of others trading members. And option D. All of the above. The correct answer is option D. All of the above. Next question. What is the minimum net worth for clearing members of the derivatives, clearing corporation or house shall be? Option A 1 crore. Option B 2 crore. Option C 3 crore. And option D 4 crore. The correct answer is option C 3 crore. Butterfly spread is an extension of option A long strangle, option B short strangle, option C long straddle, and option D short straddle. The correct answer is option D short straddle. What is the adjustment factor of stock bonus ratio is to B? Option A plus B by A, option B, A by B, option C, B by A, and option D, A plus B by B. The correct answer is option D, A plus B by B. Clients' positions cannot be netted off against each other while calculating initial margin on the derivative segment. State whether it is true or false. The correct answer is option A, true. 3 call series of ABC stock, February, March and April are quoted. Which will have the lowest option premium? Option A, February, option B, March, option C, April, and option D all have same. The correct answer is option A, February. Next question. What are the risks involved in forwards? Option A, default risk, option B, counterparty risk, option C, liquidity risk, and option D, all of the above. The correct answer is option D, all of the above. Next question. Profits and losses are settled on day-to-day basis is called option A, initial margin, option B, mark to market, option C, cash market, and option D, none of the above. The correct answer is option B, mark to market. Next question. What is the theta formula? Option A, change in an option premium by change in cost of funding the underlying. Option B, change in an option delta by unit change in price of underlying asset. Option C, change in an option premium by change in volatility. Option D, change in an option premium by change in time to expiry. The correct answer is option D, change in option premium by change in time to expiry. Next question. What is the amount one needs to deposit in the margin account at the time of entering a futures contract? Option A, initial margin, option B, commission, option C, impact cost, and option D, none of the above. The correct answer is option A, initial margin. Next question. The allocation of exercised options to one or more option sellers is called option A, exercise of options, option B, options trade, option C, assignment of options, option D, none of the above. The correct answer is option C, assignment of options. Next question. If an investor takes one long call position with lower strike and sells a call option with higher strike, both on the same underlying share and the same expiration date, the strategy is called option A, bullish spread, option B, bearish spread, option C, calendar spread, and option D, none of the above. The correct answer is option A, bullish spread. The price of the contract at the end of the day is called option A, opening price, option B, low price, option C, last traded price, and option D, closing price. The answer is option D, closing price. Mr. X has buy quantity is 3000 and sell quantity is 4000. then what is the net position to the trading member? Option A minus 1000, option B 7000, option C 4000 and option D 3000. The correct answer is option A minus 1000. What is the STT rate on sale of a futures in securities? Option A 0.05%, option B 0.125%, option C 0.01% and option D 0.02%. The correct answer is option C 0.01%. The option which gives buyer a right to buy the underlying asset is called option A call option, option B put option. The correct answer is option A call option. Who are the market participants in the derivatives market? Option A hedgers, option B arbitragers, option C speculators and option D all of the above. The correct answer is option D all of the above. Time value is the difference between option A premium and intrinsic value, option B premium and future value, option C premium and initial margin and option D none of the above. The correct answer is option A premium and intrinsic value. What is the silent feature of risk containment measures in the F&O segment? Option A clearing corporation charges an upfront initial margin for all the open positions of a clearing member. Option B the open positions of the members are settled on an MTM basis for each contract at the end of the day. Option C margining system and online positioning monitoring. And option D all of the above. The correct answer is option D all of the above. If the future price is greater than spot price, basis for the asset is positive or negative. The correct answer is option B negative. The criteria for evaluation of the index derivatives are option A trading on a minimum of 75% of the trading days during the review period. Option B 15% of trading members active in all index derivatives. Option C average daily open interest of 4 crore during the review period. And option D all of the above. The correct answer is option D all of the above. The purchase of a share in one market and the simultaneous sale in different market to benefit from the price differentials is known as option A mortgage, option B arbitrage, option C hedging and option D speculation. The correct answer is option B arbitrage. If an investor takes a position of long strangle with OTM call and put option, the strike price of call is 6,200 and put is 6,000 and premium for call is 145, put is 140. Then the current market price is 6,400. Then the net flow is option A 285, option B minus 85, option C 185 and option D minus 15. The correct answer is option B minus 85. Which one of the following an investor must follow while transacting in the securities market? Option A collect photocopies of all documents executed for registration as a client immediately on its execution. Option B ensure that have money and will be able to pay before you buy. Option C remember that there is no guaranteed returns on investment in the stock market. Option D all of the above. The correct answer is option D all of the above. A put option is said to be OTM when spot price is lower than or higher than strike price. The correct answer is option B higher than. Exchange traded options are option A standardized options or customized options. The correct answer is option A standardized options. When SEBI levy a penalty or suspension on a stockbroker under the SEBI regulations 1992. Option A if stockbroker fails to pay fees. Option B if stockbroker violates the conditions of registration. Option C if stockbroker fails to resolve the complaints of the investors. And option D all of the above. The correct answer is option D all of the above. Next question. Accounting at the time of final settlement in the books of the seller or writer will recognize premium as an income or expense in the profit and loss account. The correct answer is option A, income. A product whose value is derived from value of another underlying asset is called option A, derivatives, option B, securities, option C, shares, and option D, none of the above. The correct answer is option A, derivatives. What is the full form of SPAN? Option A, securities portfolio analysis of risk. Option B, shareholders portfolio analysis of risk. Option C, standard portfolio analysis of risk. And option D, none of the above. The correct answer is option C, standard portfolio analysis of risk. What are the risks faced by the participants in the derivative markets? Option A, price risk. Option B, counterparty risk. Option C, liquidity risk. And option D, all of the above. The correct answer is option D, all of the above. Swaps is an agreement made between two parties to exchange cash flows in the future according to a pre-arranged formula. State whether it is true or false. The correct answer is option A, true. Next question. XYZ company with market capitalization is 800 crores. Number of outstanding shares are 8 crore. Then what is the share price? Option A, 80. Option B, 150. Option C, 100. And option D, 120. The correct answer is option C. Share price is 100. An order to buy or sell a contract at the best offer price currently available in the market is called option A, market order, option B, limit order, option C, market price, and option D, all of the above. The correct answer is option A, market order. What are the main objectives of Trade Guarantee Fund? Option A, to protect the interest of the investors in securities. Option B, to inculcate confidence in the minds of market participants. Option C, to guarantee settlement of bona fide transactions of the members of the exchange. And option D, all of the above. The correct answer is option D, all of the above. What is the fair price formula? Option A, spot price minus cost of carry minus inflows. Option B, cost of carry minus spot price minus inflows. Option C, cost of carry plus spot price minus inflows. Option D, spot price minus cost of carry plus inflows. The correct answer is option C, cost of carry plus spot price minus inflows. What is the transaction when we hedge our position in cash market by going long in futures market? Option A, short hedge. Option B, long hedge. The correct answer is option B, long hedge. An investor can diversify his portfolio and eliminate major part of price risk is called option A, unsystematic risk. Option B, systematic risk. Which of the following one measures the sensitivity of the option value to a given small change in the price of the underlying asset? Option A, gamma. Option B, theta. Option C, delta. And option D, all of the above. The correct answer is option C, delta. The objective of SPAN is to identify overall potential risk in a portfolio. State whether it is true or false. The correct answer is option A, true. Next question. The difference between the best buy and the best sell order is called bid-ask spread. State whether it is yes or no. The correct answer is option A, yes. An investor sold one ABC stock futures contract at 725 rupees and the lot size is 50. What is the profit or loss to the investor if investor purchased the contract back at 698 rupees? Option A, minus 1350. Option B, plus 1350. Option C, minus 27. And option D, plus 27. The correct answer is option B, plus 1350 rupees. Responsibilities of clearing corporation is option A, keep consistent record of margins at a client level. Option B, deciding daily settlement prices. Option C, daily clearing and settlement. and option D, all of the above. The correct answer is option D, all of the above. Beta of 5 individual stocks in the portfolio is 1.2, 0.7, 0.9, 0.8 and 1.4. And the weighted average of betas of individual stocks in the portfolio is 25%, 20%, 15%, 30% and 10% respectively. Then the portfolio beta is option A 1.1, option B 0.95, option C 0.89 and option D 1. The correct answer is option B 0.95. Which of these are put option is ITM? Option A, spot price 560, strike price 500. Option B, spot price 560, strike price 560. Option C, spot price 560 and strike price is 580. Option D, none of the above. The correct answer is option C, spot price 560, strike price 580. What is the eligibility criteria for indices selection for derivative trading? Option A, trading on a minimum of 75% of the trading days during the review period. Option B, average daily turnover of at least 10 crore rupees during the review period. And option C, both A and B. The correct answer is option C, both A and B. At a trader workstation, market watch window displays on the screen is option A, order or trade window, option B, ticker window of underlying market, option C, toolbar, and option D, all of the above. The correct answer is option D, all of the above. The relationship between futures price and spot prices is called option A, basis, option B, cost of carry, option C, strike price, and option D, none in market volatility, option C, the change in option price given a 1 percentage point change in the risk-free interest rate, and option D, none of the above. The correct answer is option B, the sensitivity of an option price to changes in market volatility. Price per share for which the underlying security may be purchased or sold by the option holder is called option A, spot price, and option B, strike price. The correct answer is option B, strike price. Mr. A is trading at 6,000 and premiums for ATM call and put options are 257, 136 respectively in the long straddle position. Then what is the net flow when current market price of stock is 6,700? Option A 145, option B 48, option C 307 and option D minus 252. The correct answer is option C 307. In the F&O market, what lists the futures OI gainers? Option A, futures whose percentage increase in open interest is among the highest on that day. Option B, futures whose percentage decrease in open interest is among the highest on that day. The correct answer is option A, futures whose percentage increase in open interest is among the highest on that day. What is the fundamental factor affecting the premium or price of the options? Option A, time to expiration, option B, interest rates, option C, strike price of the option, and option D, all of the above. The correct answer is option D, all of the above. Which of the following is major recommendations of Dr. L.C. Gupta Committee? Option A, derivative segment must be separate from cash segment. Option B, grossing up of margins at client level. Option C, separate investor protection fund must be created for derivative segment. And option D, all of the above. The correct answer is option D, all of the above. Contract value is calculated as option A, future price by lot size. Option B, future price is contract value. Option C, future price into lot size. The correct answer is option C, future price into lot size. If a trader goes short in a put option of strike 10,800 and receives a premium of 300 and goes long in a put option of strike 10,500 and pays a premium of 130, then what is the profit or loss when the current market price is 10,400? Option A 170, option B 30, option C minus 130 and option D 70. The correct answer is option C minus 130. Significance of derivative market is option A. It helps shift of speculative trades from unorganized market to organized market. Option B. Hedgers want to give away the risk whereas traders are willing to take risk. And option C. Both A and B. The correct answer is option C. Both A and B. What happens if future prices are more than the future fair price of asset or synthetic futures price? Option A. Trigger reverse cash and carry arbitrage. Option B. Trigger cash and carry arbitrage. The correct answer is option B. Trigger cash and carry arbitrage. Next question. Which one of the following order is correct in corporate hierarchy of futures and options trading software? Branch manager, corporate manager and dealer. The correct answer is option B. First corporate manager, after that branch manager and after dealer. Anybody interested in taking membership of F&O segment, then which membership is required to take? Option A. Capital market and F&O segment. Option B. Capital market, wholesale debt market and F&O segment. Option C. Both A and B. And option D. None of the above. The correct answer is option C. Both A and B. Forward contracts are exchange contracts or over-the-counter contracts. The correct answer is option B. Over-the-counter contracts. Long or short position in any futures contract without having any position in the underlying asset is called option A. Cross hedge, option B. Calendar spread, option C. Naked position and option D. None of the above. The correct answer is option C. Naked position. Next question. What is the feature of futures contract? Option A. Price discovery through pre-interaction of buyers and sellers. Option B. Contract between two parties through exchange. Option C. Quality decided today. And option D. All of the above. The correct answer is option D. All of the above. What are the complaint types can file investor on listed companies? Option A. Regarding non-receipt of dividend, interest, bonus shares, etc. And option B. Regarding non-receipt of securities after dematerialization, after transfer or transmission. Option C. Both A and B. Option D. None of the above. The correct answer is option C. Both A and B. A long straddle position is created by option A. Shorting a call and a put option of same strike and same expiry. Option B. Buying a call and a put option of same strike and same expiry. The correct answer is option B. Buying a call and a put option of same strike and same expiry. Difference between the long option positions and the short option positions valued at the last available closing price of the option contract is called option A. Cross margin, option B. Net option value, option C. Client margin and option D. None of the above. The correct answer is option B. Net option value. Next question. If future price is lower than spot price of an underlying asset, market participants may expect the spot price to down up in near future. This expectedly falling market is called option A. Backwardation market, option B. Contango market. The correct answer is intrinsic value of put option can be calculated as option A. X minus S or option B. S minus X. The correct answer is option A. X minus S. Market participants may trade in futures market to protect the closely associated value of their asset in cash market is called Option A, short hedge. Option B, long hedge. Option C, calendar spread. And option D, cross hedge. The correct answer is option D, cross hedge. Next question. The price at which the underlying asset trades in the spot market is called option A, spot price. Option B, margin. The correct answer is option A, spot price. Reverse cash and carry arbitrage refer to long position in which market? Option A, futures market. Option B, cash market. The correct answer is option A, futures market. Next question. A short option position has option A, limited risk and unlimited profit potential. Option B, unlimited downside risk but limited upside potential. The correct answer is option B, unlimited downside risk but limited upside potential. Next question. The issue of assignment of options arises only in the case of European option or American option. It's time to ask a question for you. The question is gamma equal to option A, change in an option delta by change in time to expiry. Option B, change in an option premium by change in volatility. Option C, change in an option delta by unit change in price of underlying asset. And option D, none of the above. Please mention the answer in the comments. Thanks for watching my video. Please subscribe for more videos.